ETF versus crypto. Which is better? Ready? Let's go. So you've probably heard about ETFs and crypto everywhere. But what's the real difference? First up, ETFs. Think of these as baskets of stocks, bonds, commodities, all bundled together. You buy shares of an ETF just like regular stocks. And they're traded on major exchanges. ETFs are super popular for their diversification, lower fees, and they're a set-it-and-forget-it way to invest. Now crypto, we're talking Bitcoin, Ethereum, and a wild cast of digital coins. Crypto isn't tied to traditional markets or governments. It's powered by blockchain, a digital ledger that's open for everyone to see. The big draw? Massive potential gains, 24/7 trading, and the thrill of being part of the next financial revolution. But let's be real, crypto is volatile. Prices can skyrocket and crash, sometimes in the same day. So, which one's better? Well, ETFs are great for steady long-term growth. They're regulated, less risky, and perfect for building your wealth slowly and steadily. Crypto? That's for the risk takers. The upside is huge, but so is the risk. It's like the Wild West out there. Here's the kicker. You don't have to pick just one. Plenty of investors mix both. ETFs for stability, crypto for excitement. And hey, there are even Bitcoin ETFs now, blending the best of both worlds. If you're just starting out, ask yourself, do you crave stability, or are you chasing big, fast gains? Either way, do your homework and never invest more than you can afford to lose. Alright, that's your crash course. ETFs versus crypto explained, fast and simple. Subscribe, invest with Declan.